I call you guys warriors for a reason. And it has to do with, things that we have to live through with like a move like this in S&Ps yesterday and really took the whole market down on a number. If you came in short S&Ps or any other position prior to the CPI, good guess. So binary event, it reminds me of roulette, betting red or black. This all happened, this candle, pretty much in 5 minutes. So, here's your 15-minute. Well, it's all the way back there. So if you felt like the Egyptians chasing Moses through the Sea of Red, Red Sea, as they were escaping their slavery in Egypt, and then once they crossed, all the chariots were in the middle of the Red Sea, and the sea closed up over them. If that's how you felt yesterday, you probably had plenty of company. And the key is this created opportunity, okay? And where I want to start, which is the title of the video, is US dollar yen. So US dollar yen, to me, you can't rule out another push up, but that we actually made a new high here. Depends on your platform where you trade, etc. But this candle shows a high of 144.964, and the high here was 144.991. So actually they did not take out the stops here, which would have made me more bearish if it had been a stop hunt. Thought that we had. I was looking at it at 45 last night and figured, well, I was planning on shorting it above this, but again, you never know in this business. If you go to sleep, if the market's still going to, it's not going to be there. But I thought we'd have more follow through to create the divergence, which we had. Although you can't count it now as a divergence because it's not a new high, but you have a pretty negative day here anyway. Okay, so you had very, very, very intensely bearish inflation news yesterday. And let's just say the yen tried to make a new high with its correlation to yields and has failed to do so. Bank of Japan checking rates. We're getting closer and closer, and the market's getting a little bit more nervous about an intervention. But what does this portend? And, I think the star yesterday, which is coming in a little lower right here, was the bond market. So bond market got hit with as bearish news as it could have expected, especially since the market was set up for looking for a more benign number, not the kind of number they got yesterday. Therefore, the reaction you had in S&P is a lot of people off sides. But I look at the bond market here and look at this glaring divergence here. So the further you go out on the curves, the more constructive the charts look. And this looks like it could be making a turn. And if it does make a turn, I don't like to make Nostradamus, Pinker predictions, but, getting back over 108 would be a start. And then you're going to have your 50-day up here at 113, this old resistance level. But I actually think there could be a reversion to the mean back towards 127, 130. And what's significant about that is that's where the breakdown occurred in bonds, which peaked way before the market did. Maybe not way before, but at least 2 months, a month. So a month earlier before stocks peaked in January of 22. So the bonds lead. So maybe we're going to get an important low here. Here's your weekly, still very good divergence. I'd like to see it close higher on the week. That would be 108.70. And ideally back over 110 is going to be a big deal. But to me, this looks like it's attractive and viable for spec longs, maybe through the use of defined risk option strategies might be the way to go. I think that volatility is pretty high in TLT options, so you may want to do a little writing along with your purchases, bull calls, spreads, etc. But this, I think, is setting up for a major trade. And I was wrong before. So, probe and protect. This weekly candle that we had on another major event, I think was the NFP, the way it came back and closed higher on the week, thought we'd put in a higher low. And then once we broke down here, I said, well, perhaps a 3 drive. Well, now I'm saying looks like we're getting one here. So bonds look attractive to me. And if that's the case, this double top in US dollar yen should have some follow through. It's not ideal. I mean, we're still over 70, shows the power of the move. But, you could have a quick move to 137 on intervention. That'd be 500 handle move. When you look at the daily, we made a lower high in RSI, but all the intraday charts have all kinds of divergences against prior highs. So bearish yen, sells strength. Maybe we get a rally back towards 44 or so if that's possible. And you're wrong over 45, but don't put your stop at the high because normally this candle would have gotten into that liquidity. So, give us some tolerance because we could have another test up there even. And it could be the stop hunt that didn't take place here. Anyway, a negative picture is what I'm seeing in US dollar yen. Let's go to the other currencies. On Monday, I talked about buy zones, areas of interest where I'd be looking to buy euro. And I talked about par 40 to par, got down to 99.60. It's trying to hold, but, it's not doing anything real special today. Actually, the pound is the relative strength leader. Pound may have bottomed here. And I still think there's a possibility that the euro puts in a higher low. We're still above the lows that we made last week. Dollar is still below the highs it made last week. Limited follow through to the news. This could be a failing rally. If we fail from here, just equality would take it down to 107.5 or so, and 1.618 is going to take it down towards 105. So if this is a peak, and I had to try it because I'm going with this last week, reversal week, being a pretty negative week, and then we had a big shakeout. I still think the long dollar is a crowded trade, even though we had a little pullback in the dollar. I think the short euro is still a crowded trade, even though we had a rally back towards 102. Should we form a low here and we have equality here, that would take us to the battleground at 103. I just want to cover the metals here. And, what's interesting about silver, which I pointed out, breakouts here, even tagging these lines only a week ago, that silver has morphed from something that was presumed dead on arrival when we're trading to 1750 before, and that was definitely a stop hunt. Okay, so that's why I took that name, stop hunters. Mr. Market will do everything it can to shake out as many players as possible before the direction they're looking for occurs, then most likely without them, because people had stops under this low, and they said that's it, silver's done, and they didn't notice some divergences. But what the point I'm trying to make here is that silver, from being a very weak chart in my universe of instruments that I cover, has become the strongest structure of all the different markets I cover. So if we do get another risk off event and the S&Ps break down, I don't think silver is going to make a new low. I think that what you need to do now as a trader, and I don't click the mouse for anyone but me, is while the market's doing this and in a consolidation phase, and it could keep running, but should it correct, what you need to do as a trader, whatever tools you use, is get your levels, define your levels of should the market enter a certain zone, then you're ready to execute. You're not doing analysis on the fly. Say it got down to 1880, you go, I wonder if 1880, and then you start looking at things to support your argument. Do your work now and prep for it, and then there won't be any hesitation. Because I tell you, if you hesitated in S&Ps yesterday, you missed it. So preparation is everything. It's the strongest chart I see. If there's more pressure on risk assets, to me, I see it creating just retracement moves in silvers, not a break to new lows. That's a low probability to me here. Could gold do it? That's possible. Is gold going to drag it down, or is gold going to hold? I'm going with the relative strength. That's always been my philosophy, although I own some gold miners, and one of them is doing exceptionally well. In fact, let me show you this one. Would be a good candidate for a pullback should it happen. So BTG, in basically a week, run from 290 to 370. They pay a 4% yield, no debt. So that was what, 30% in a week. So if you had to pull back to 320 or so while gold was puking, 310, you could get long, prepare yourself, buy the break, risk the lows. So that's a pretty good looking miner. I also wanted to cover, yes, the gold silver ratio. So, I mean, this was one heck of a move, right, traders? Look at that. Look at the velocity. So could there be corrections where gold acts better than silver for a while? Could we get a bounce to 90? I think so. Like I said a week before when we were up here, in fact, you could go back to some of my videos, and when we were at this candle, before last week's down week, I said, we need a red candle to be the trigger for a 3 drive to a top formation. And we got it last week, and I call this pretty good follow through. The make or break point battleground to me on the gold silver ratio is this 83 level. Under 83, you're talking the 70s. And in fact, tomorrow I'm going to be with a guy who's really experienced in the silver market, David Morgan. His Twitter handle is Silver Guru 22. Maybe he got it when he was 22 years old. Oh no, Twitter wasn't around then. So tune in for David tomorrow. We're going to be talking about the recent heartbeat in silver. He believes a big squeeze has begun. Great timing, because I set this up a month ago, but the markets are cooperating. So we'll be talking about that. So, major message out of this is this could be a pretty important top in US dollar yen. Perhaps interventions around the corner as they're checking rates over there. That should lead to at least a pullback in yields. We're about to test the recent high, which was 349.70. We're only about 7 bips away. And look at this on the weekly. There'll be divergence should that happen on the weekly. Let's see the daily. Not really. 4 hour, yes. So over 350, we're not going to confirm on the 4 hour. So that's my take. Use any weakness, even under 106, maybe look at some long bond strategies. Let's see if the euro could put in a higher low and cable could put in a higher low. And, hope for more risk off in case you weren't there and didn't participate on this wave 1 in silver. Because this wave was about $2.50, I'm looking for $4 on the next advance from a pullback. So say we go to 1860 or so in the coming weeks. And remember, yesterday I talked about that we have a negative seasonal cycle with Michael yesterday, and that for the S&Ps until early October. So, if we chop around for a few weeks and say we traded 1860 and you tack $4 on it, that's going to take you up to 22.5, which, was a pretty important area was the breakdown 22, 22.5. Oh, what a coincidence. The 50-week moving average is at 22.50. So I invite all of you guys to come in and share your work with us here in TradeGATEHub.com. We have Jobas with us, really a great tactician, Elliott Wave guy. You guys know what Mike can do. And even on a day like that yesterday, very minor drawdown. Guy knows how to manage risk and has an eye for finding things that are happening. You want to learn from Mike. It's a very giving person and willing to share. If you're willing to do the work, he's willing to teach, as am I. And good hunting. If you like what we're doing and it's adding value to your journey as a trader, hit the like button, spread the word about TradeGATEHub.com. People won't believe you, it's free, and we're not trying to upsell you anything, no subscription. Perhaps since you're trading anyway, you have an account, and you may want to consider TradeView Markets because you really don't know. Mike knows this. You don't know what kind of racehorse you have till you run it against another. So good luck the rest of the week. I'll be here with David tomorrow to talk about silver, David Morgan at Silver Guru 22, and Mike will be up. He's on deck. He'll be in the batter's box in an hour and 15 minutes. Don't just count your pips, count your